If you find this video helpful, please don't forget to like, share, and subscribe. Let's move from theory to reality and look at one of the most famous and successful practitioners of the stock split, Apple Inc. The tech giant has a long history of using splits as a strategic tool to manage its incredible growth. One of the most notable recent examples occurred in August 2020. At that time, Apple's stock price was soaring, pushing past the $500 per share mark. This phenomenal price was a direct reflection of the company's immense success, driven by the unwavering popularity of the iPhone and its expanding ecosystem of services. However, this high price point was becoming a barrier for many everyday investors who wanted to own a piece of the iconic company. To address this, Apple's board of directors announced and executed a 4-for-1 stock split. For every single share of Apple an investor owned prior to the split, they were given 3 additional shares. As a result, the stock price was quartered, dropping from its lofty perch of around $500 to a much more approachable price of approximately $125 per share. This move didn't change Apple's nearly $2 trillion valuation at the time, nor did it alter the total value of any individual's investment. What it did change was the accessibility and psychology surrounding the stock, making it feel attainable once again for a massive global audience of retail investors. The primary motivation behind this move was clear: to democratize ownership. Apple has a fiercely loyal customer base, and the company wanted to ensure that these customers, as well as its own employees, could more easily participate in its financial success by becoming shareholders. By reducing the price of entry from $500 to $125, they opened the floodgates for smaller investors. The split was a resounding success in this regard, leading to a surge in trading volume and renewed interest from the retail investing community. It was a classic example of a strong, confident company using a split to maintain a healthy and broad investor base. This was not Apple's first rodeo. The 2020 event was actually the 5th split in the company's history. This consistent strategy shows that Apple's leadership has long understood the value of keeping its share price within a comfortable range for individual investors. Each split has followed a period of tremendous growth, acting as a milestone that celebrated past success while paving the way for future appreciation. For investors, Apple's history of splits serves as a powerful case study in how a forward split can be a sign of robust health and a forward-thinking approach to shareholder relations, reinforcing the company's image as a blue-chip investment.